This is a much larger issue that we're dealing with. Hey everybody, crazy day today. Let's just jump right into it. Stay to the end because we will go over the indexes, and it's really important that you understand where the bond market is and where the NASDAQ is because there are pivotal levels. The first one I want you to watch tomorrow is I want you to watch Tesla, and I'll explain why. So we had this rally and we're going to drill down into these on short-term time frames because we have the Fed on Wednesday. So expect a lot of flim-flam. And for those that are new, flim-flam is when these move and they shake us out, make us think they're going to break and then don't break. You know, we look like we're going to break down and then we don't. Now you could actually argue you have a bullish engulfing right here with the way that this body has completely encompassed that body. My one concern about this is that I could not get over the 200. Could not happen. My volume was lighter than Friday's volume. Both things that you don't want to see. So this is a really very simple trade. I would be leaning towards the short side on this. And one of the key metrics that we're using, I'm going to link this RSI video at the end of this, and I would strongly recommend that you watch this RSI video because these trades worked perfectly today. So every time you're seeing this RSI pop over 70, you're getting a spot to put a possible short on. Now, whether or not it works or it doesn't, it's been working all day. So here, they all gave us opportunity. And you can see here where you could have stepped in if you wanted to buy. So I can just keep going through this chart and pointing them out over and over again. But you need to understand that they're working really well right now. And usually in light volumes, when you're in chop, RSI is a great indicator to use. You have a really clean level here on what you could use as your stop. Now, if you gap up tomorrow morning, and I'm going to save everyone a lot of time, you have the ability to gap up tomorrow just as quickly as you could gap down. Nobody knows. I do think the bond market's giving us a signal, and I'll get to that at the end. But what I want to focus on here is very clean. You have a clear level that you know you should not break. You should not be short something that is over the 200-day moving average. I mean, I think we can all agree on that. So if you see this roll and form a pattern there or use an RSI indicator to enter a short position, this is a great place to enter a short position. I mean, look at this. Open, 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 close, right? Bonk, bonk, bonk. I mean, if you look at this, you are in a bear flag, right? And then you go and go, okay, the open was 898. Okay, open. 899, open 902, close 902. So, I mean, you can see what's going on here. We're riding this. Now, that doesn't mean that it doesn't flip. Maybe we do go higher, but you have the ability to enter this with about a $4 stop on Tesla, which is risk reward is just insane. So that's why I'm spending time with it, because if we do break, if we do roll, this is something that you might want to be short, especially if you were short it today and could have made $50. We shorted this in the trading room today, had a decent trade on it. So let's just keep going through these. Now, this is one that I'm going to just throw a caveat out there. I did cover this a little bit in the weekend video, but I am also long this right now myself. So I like this here, and I'm going to just walk you through this on a 1-minute chart so you can see this. So again, you're breaking down, but the RSI is not breaking down anymore. Well, what is that called? That's called a positive divergence. You're really going to want to watch that RSI video, and you can see how we responded when we got up to these levels, right? Rejection, rejection. Look at how when you flip that level, how that puts in a short-term top. Every single time it did that today, short-term top. Okay, this is just how you trade chop. And so I would really recommend you watch that video. But again, really clean. So if I break this lower low tomorrow, you just get out of the way because now you have an outside bar. But if you gap down tomorrow and you're looking for a spot to buy, you're really right there. You're in that area because you're flipping. But if you get the lower low, just get out of it. Get out of the way, let it reset, because things can always go one way or another more than we think, right? And especially now when we're going to have light volume until the Fed meeting comes out. But there are some good earnings that came out and some bad earnings, and we're going to cover those too in a minute. But I always want to point this out. This is the best looking sector out there. Oxy, look, let's just jump ahead here. See this level? You held the 50-day on the sector, the energy sector. Show me another sector in the S&P that's holding their 50-day. You can't. So, this is where you need to focus on if you're going to look at longs. Oxy has earnings. What we go over here in the top 5 are short-term trades. So all we're going to look to do tomorrow is just flip that level. All you're going to look to do is flip 58, 55, and then you can take the risk and see if you can climb up here. Now, be aware, you have earnings coming up. Earnings are coming out on May 10th. So you have risk, okay? So you're going to want to trade up on that risk, get up and in it, and then either scale out of it or buy puts behind it. But you're going to want to hedge into that unless you're up like 10, 15% on the trade. But I like that idea. And energy, I just don't see it going anywhere. Now, MOS had earnings tonight. Revenues were down, earnings were down. This is not what you expect to see in a situation where you have fertilizer prices climbing. And this may explain, maybe some of the fundamental analysts that work on the buy side saw this coming, might explain the weakness. But you have a perfect bear flag here with a doji. Very simple trade. To me, this is a short now. We did well on a long on this, but this is just an outright short. If you open tomorrow below this 60, 63, and you've been bouncing around all night, I would strongly look at this. And this would be something that, to me, can really get ugly. Like really ugly. If you're not going to have good earnings in this environment, they're just going to throw the baby out with the bathwater. And give you an example of what that looks like. Okay, that looks like this. Okay, this was earnings, and the earnings were not great. And then this is exactly what happened the next day on those earnings. So 2 days later, you were down pretty substantially. I can expect the same thing to happen with MOS. So, about a 20% move here. That wouldn't surprise me if this drops out of bed $10, $5, $10. I think you could drop out of bed. You can get into the 50s on this. I think that's realistic. Like, I don't want to be dramatic, but here, look, there's no reason that you couldn't get to that level. There's nothing here, right? Especially if you get through that level. Maybe someone could make this argument, but this is look at the volume here. So I would tend to lean towards that one. Now, Expedia had really good numbers and things look very well for the company, but you're going to have to just make sure that we have follow through, because we haven't had follow through. And I'm below the 50 and I'm below the 21. A matter of fact, good companies have been getting dumped. But I do think that this can trade itself back up to this 200 level. If you take a look at the top of this wick right here, okay, I think you can get back up to here. But it's going to take a little bit of time. You're trading sideways, so I don't put that much weight into the moving averages, but they're still there, and we held the 200. You have a long-legged doji here, which I like. But just watch this 177.88 level tomorrow. If you get over that, I think you have the possibility of getting up here. Revenues were good. Earnings are good. If the market's going to go higher, these are the kinds of names that are going to work. Names that are in tech or tech-based that have earnings growth. That's where the money's going to go. But this remains to be seen. But use that 177.88 level now. This is a much larger issue that we're dealing with, and we're going to get rid of the RSI, and we're going to get rid of the volume for now. But just focus on this level. All right, now we're going to show you the 5, and you can see how you stopped right on the 5. You can see how you broke the 5, how you got above it and didn't have a higher high. If you get above the 5, if you close above the 5 on a higher high, it would be the first time that you've actually done it, right? You haven't done it in forever. So for the past 3 weeks, every time you're above the 5, you roll. So what we're looking for is to get above the 5 tomorrow, Tuesday, close above the 5 again Wednesday. That could give us a reversal of pattern, okay, which we have not had for 3 weeks. Just keep that in mind. In the meantime, all I see, right, and I would rather be up than down because it's easier to make money on the long side, although we did well with shorts today. But if you look at this neckline right here, okay, left shoulder, let's get rid of these indicators. Left shoulder, head, right shoulder, neckline. Broke the neckline, bonk, comes down, right? Opens right there, comes down, makes us think that we should all be short, comes up. All we're doing is testing the neckline. That's all we've done. So to say that, hey, this is over because we decided to go a little bit higher today, that remains to be seen. And this is one of the key reasons why I don't think, we've had some chatter today, specifically, we had it in the trading room where people were discussing, oh, maybe someone knows what the Fed's doing. Look, if anyone knows what the Fed is doing, it's the bond market. The bond market always knows before the equity market. Okay, the 10-year did not sell down at all on this when we rallied. So to me, that's telling us that nothing has changed. I don't see how the Fed's not raising 50 basis points. The language is really what's going to drive the market. But this is definitely something where if the 10-year started to rally, if the yield starts to rally, right, and come down, meaning that we're buying bonds, that could mean that there's been a change or they may know something ahead of us. But until then, that's not something that I would be playing with. And the one that's going to benefit the most from bond yields dropping is going to be IWM. That's not really moving as much. So really, if you take a look at what rallied today across the board, the Qs rallied more than any other sector. Why is that? Well, very simply, that's the ones with the highest short interest. So that's where I'm leaning towards. This was more of a short covering rally than anything else based upon a couple days that have been going on. So that's it. That's all I have. Please comment below. Please subscribe to this channel. And in the bottom, you'll see a featured channel now. So I am starting to put out clips of these. So in 60-second increments. And there'll be different content on that other channel. It'll be in the featured channel below. So that's it, everyone. Have a great evening.